Hi, we just wanted to wish you a Happy New Year.
Yeah, Happy New Year.
And if you're into making New Year's resolutions, we wish you the very best of luck at achieving them by this time next year.
Yeah, and if you're going to be buying or selling in Las Vegas in 2018, definitely check out the expert information that's going to follow. Has a lot to do with interest rates, what's going to happen in 2018, predicted by experts, and also prices know whether you should buy earlier in the year or sell or later in the year. Check it out. Happy
Happy
New
New
Year.
Year.
Welcome. This is Tom Huser with the Huser team and Realty One Group. Thank you for tuning in. I would love to tell you a little bit about what experts are predicting in regards to interest rates and home prices in 2018, so that way it'll help you make a educated decision on if you're selling then buying right now, or if you're renting and interested in buying. Definitely some great quality content. I hope your 2017 was awesome, but here we are already in 2018 as life moves fast, and here we go. So you'll see on the screen here I have interest rate lock and mortgage. So I'm not necessarily at this point talking about locking your interest rate on a mortgage, which kind of in a way I am, but it's getting rate locked into a house that you don't love, or rate locked into still continuing to rent, because experts are predicting that mortgage rates are going to move up. And as this happens, if you have a low interest rate right now on your house that's say 3 or 3.5%, and next thing you know, interest rates are up another percentage point above that or even higher, you could end up living in a home that you don't love or continue to rent because you don't want to pay the higher interest rate on that mortgage amount, especially when trading up. So here's some of the projections that are happening by Freddie Mac, Fannie Mae, Mortgage Bankers Association, and the National Association of Realtors. So you can see here it steps up by each quarter. On the left-hand side, it goes Q4 of this year, then first quarter, second quarter, third quarter of 2018. So really, if we switch all the way to the right-hand side where it says average of all three, the experts are predicting that interest rates will be up probably around 0.5 percentage point by the third quarter of 2018. So here's where interest rates have really been over the last 2 years. We kind of went way down, way up, and we're back to where we were. And in this time frame, we saw some of the lowest interest rates in history. So back there where it says 11.3, right in about the middle of the slide, where it just flies up. That was right after the presidential election had been decided. Interest rates just flew up. Then as you can see that they kind of calmed down. Then off to the right-hand side in October where it says 10.12, that is where the Federal Reserve announced that they were going to start selling $10 billion worth of mortgage assets every month. They're allowed to do that at their discrepancy. So that is why experts are predicting that mortgage rates are going to start trending up. And obviously the Federal Reserve has also started just increasing the overnight lending rate. So housing affordability. Easiest way to describe this is the higher the graph is, the more affordable that it is for the year. So the gray boxes, or the gray lines where it says years when distressed properties dominated the market, that was the most affordable time frame. This graph takes into consideration not only the home prices but the interest rates, because majority of homeowners are basing affordability off their monthly payment. So obviously both matters, price and interest rates. The one we're looking at today is the green line all the way to the right. For today it's 160. As you can see over the past, the other blue lines way off to the left, 1990 through let's even call it 2004 or 2003 were kind of the normal years. We're way more affordable right now with these low interest rates and current prices than we have been in the past history. It's very, very affordable. Many people were not able to buy in the gray area here in Las Vegas because their credit was ruined due to the foreclosure and the short sale crisis. So we're seeing a lot of good credit coming back into the market now where people are able to purchase. So here's also another way of showing the percentage of the median income needed to purchase the median priced home. So today it's about 21.4% of the income goes to just, paying for the house. As we can see, this is about 5% cheaper than 2000 to 2003, and it's about 3% cheaper than 1995 to 1999. And I did forget to mention earlier on, if you want to know any of the sources, this all came from, if you look in the bottom right-hand area of the slide, it'll actually show who came up with this data. So if you want to question any of the data, you can look it up directly on their websites. That's where the information comes from. I did not pull all this data, admittedly. This is others reporting. Here's the last 45 years of the 30-year fixed rate. It's very obvious that interest rates just came down and down and down and down for many, many years. Let's hope now that there's so much liquidity in the market that we really won't get back over that, 6 or 7%. But, with that said, we're at historic lows right now. So the experts are extremely confident that we only have one way to go, over the long period, which is back up. So what will be the impact of mortgage rates? So obviously payments. Your monthly payment is going to change. This shows a big picture view since 1990 through today, based on home prices and interest rates. And as you can see today, all the way off to the far right where it says $960, we're much more affordable even right now today than historically, through 1990 through 2004, 2003. Obviously, we would all like to be where that, off to the right-hand side, like 2012, where it's $664, where payments were extremely low. And that was just coupled with, the crashing of the housing market and the low interest rate environment. It all just worked together there to make it the most affordable. But everything is still really affordable right this minute in the big picture. So dramatic mortgage rate increases. Now, obviously, experts aren't predicting dramatic mortgage rate increases, but they are predicting them. But people are saying, well, if interest rates go up, home prices will come down. Well, this doesn't show that. So calculated risk put this together. If we just look at the left side as the first example, so May of 1983, interest rates were at 12.6%. And in July of 1984, they were at 14.6%. So they went up about 2 percentage points. And in the meantime, if you look all the way down at the bottom, housing prices went up 6.6% on average. So that's just kind of how to read this graph. In 2000, in 1999 to 2000, all the way off to the right, home prices came up almost 11% when interest rates went up, 1.5. So people are doing studies just to understand, what is to come as interest rates go up. And really the reasoning that both tend to go up at the same time is the big economic picture. Unemployment is really low right now. Underemployment is getting much better. Housing market is doing well. Stock market is doing good. So we're just in a great environment right now economically. So a lot of people are asking, what's expected for the 2018 housing forecast? Well, let me first take you back to what's happened actual year over year over the past 1 year. So as you can see, Nevada is about 9.5%. Do want to caution you that this was, as a state. So, that's an average of the entire state. Not everything went up 9.5%. Some actually went up more. Some actually, went up less. So call us if you would like to know precisely on your exact property what happened. I can tell you over the last year, more expensive homes in the $1 million marker appreciated much less than lower dollar homes that are, in the $100,000 to $200,000 or $300,000 range. They definitely appreciated more. So definitely, a science to that of getting that figured out for your exact house. And this was reported by CoreLogic. So now CoreLogic is also predicting what's going to happen over the next year. So they are predicting here around 9% again in Nevada over the next 12 months. So again, that's blended over the entire state, but obviously very good news to hear that, we're going to continue to keep moving up. Obviously, you'll see the West Coast here, for the most part, is, trending higher appreciation than, a lot of the East Coast or even the middle states. And really what happens here is, we got hit really hard during the foreclosure crisis. And we're also still just very affordable. Las Vegas is very affordable in, the big picture of the United States. And you have a lot of retirees that are moving here because they're on fixed incomes. And it just makes sense. We have great weather. We have lots of things to do in Las Vegas. So get out of these more expensive states and kind of start migrating to Las Vegas and Nevada as a whole for our great weather and good economic and real estate environment. So this is another way of just kind of putting it all together that I just talked about. What happens when prices go up and interest rates go up. So on this chart here, it breaks it down really nicely with the $100,000 mark for today. And if you wait longer and home prices go up, that mortgage is now $104,000 because it has to take into consideration higher home values. And then if interest rates are around 4.2% and they go to 4.8, we're still taking a little over half a point or around a half a point difference. That's going to move you up around $60 per 100,000. So if you're looking at a $400,000 situation, then it would be about a $240 increase in your payment. So this is really just good to pull all this data together to put that together. So don't delay. If you're going to, if you know for sure you're going to make that move this year, don't get stuck in a house that you don't love as interest rates go up and you get frustrated that you missed the low rate environment and the housing prices and interest rates moved up and you got stuck. So National Association of Manufacturers, they're saying that the Consumer Confidence Board said that consumer sentiment was at its highest level in nearly 17 years in November. The Consumer Confidence Index rose from 126 in October to 129, notching its best reading since December of 2000 for the second month in a row. So that's pretty awesome. 17 years. Here we are, great economic environment. Americans are more upbeat in their assessments of both current and future economic conditions. So this is what is propelling our entire economy forward, since everybody is, feeling robust in their jobs and their careers and financially. It just really helps us all move forward together with, a strong economic environment. So I hope that this has been beneficial to you and helped paint the big picture. Because obviously, buying a home and selling a home, those are your largest financial decisions to ever do. So we want to be here, the Huser team, to help you through this decision. Please call us with any questions. Would love to answer them for you. I know that I went over this information really quickly, and there's a lot more to it than this, but I didn't want to make the video too long. So have an awesome 2018, and we look forward to hearing from you soon.